Hello, Audrey.
How you doing?
Good, how are you?
Hello.
Hello.
Did you guys ever hear back from the other two to see if tonight worked for them?
I got on a call with Zach. Zach just called me just after we had gotten off, and he said Monday's fine.
Oh,
So
perfect.
I
Okay.
hadn't heard from Angelina. I don't know what's going on. So
Sounds good. Well, we'll hope for the best then.
yeah.
So I'm gonna try to move this in the other room because maybe I can get better reception than in here. So if I get cut off,
Howdy.
Hello.
Hello, Zach.
How you guys doing?
Doing great. How about you?
Good, thank you.
Audrey's just moving rooms, so she should be back on in a few minutes here.
Okay.
So, and we haven't heard from Angelina, so hopefully she gets to join us.
Mhm.
Hello? Am I connected?
Hey, you're back.
Hi. Sorry about that. I tried to change rooms. I thought maybe I might get better connection. Here I am.
Sounds perfect. Okay, you guys, do we want to get started or do we want to wait a few more minutes to see if Angelina hops on?
We're already kind of 15 minutes later than we normally start.
I think if she comes on, we can catch her up.
Sounds perfect. Okay, so do we want to start with the quiz or with the mind map?
So probably the quiz.
Okay, sounds good. Do you guys want me to just read it like I usually do?
Yeah.
Or I can. But I got to open it up just a minute.
Okay. Works for me.
Where am I? Sorry, I'm slow.
It's like you misspelled happiness. I thought the blocks on top spelled the word and the blocks on bottom spelled the word. Not as if the vowels up. Although that I would technically be off. It makes it a little
Alright.
Okay.
different. Behind it, that pink one, because it's half on, half off. Normally that would work, but in it, not at all.
And we're on group lesson 10, right?
11.
11?
Oh, maybe
No.
11's this week.
We're
Maybe
still on 10.
Yeah, so 10. My bad. I was doing 11 today, so
Oh, you're so
stuck
good.
in my head.
All right, I'm ready. So,
Okay, so did you say you wanted to read them, or would you like me to?
I can, because like you do it all the time.
Sounds
maybe,
perfect.
you know, we'll just chime in. Okay. So, question number 1. The main function of the Federal Reserve System is to, and I put number 4, control the money supply.
That's what I put also.
Me
Yep.
too.
That's what I put.
Okay. Right. Number 2. There goes my phone. M1 money supply is composed of, and I put number 4, checkable deposits and currency in circulation.
That's what I put also.
Me too.
Same here.
Good. Sorry about that, guys. Number 3, which definition? Oh gosh. Which definition of the money supply includes only items which are directly and immediately usable as a medium of exchange? And I have M1.
Yeah, me too.
Yep, that's me also.
Yep. Same here.
So, and then number 4, use the following list to answer the question about money supply. Items 1, 2, 3, 4, 5, 6. I put number 2. 1, 2, 4, 5, and 6.
That's
Me
what
too.
I put also.
Yeah. Mm-hmm.
Everybody, so everybody okay on that one, or do we have?
No, we're good.
I'm number 2 as well, so.
Yep,
Alright.
same here.
Okay, then number 5. One reason that near monies are important is because, and I put number 2, they can be easily converted into money or vice versa, and thereby can influence the stability of the economy.
I put the same thing.
Me too.
Yep, same here.
Happy. The Federal Open Market Committee, FOMC, I put number 3, sets the policy on the sale and purchase of government bonds by the Fed.
I put the same thing too.
Yeah.
Yep.
Anybody else?
Yep.
Okay, good. Okay, number 7, when a banker records how many dollars each of his borrowers owes the bank, the money is serving as a, and I put number 2, unit of account.
That's what I've got also.
Okay.
Yeah.
Yep.
Okay. Then number 8, money functions as a store of value if it allows you to, and I put number 3, delays purchases until you want the goods.
Yeah.
That's what I put too.
Yep, that's what I did.
Yay. Okay. Number 9, United States currency has a value primarily because it, and I put number 4, facilitates trade, is legal tender, and permits the use of credit cards and near monies.
I put number 3 on that one.
Is relatively, you know what, I was thinking that was probably the right one because they're relatively scarce. And
I put 3 as well.
I like 3 better.
That's what I put.
Okay, let's go with that.
Sounds perfect.
Okay, number 10. If the purchasing power of the dollar is falling, then it follows that, and I put number 1, the price index is falling. I think I wasn't sure on this one.
I put number 2 on that one. The price index is rising.
I put 2 as well.
That's what I put, yeah.
Okay. I think I went back and forth, and so I'm good with that. Number 2, okay. Then 11, the bank has $2 million in checkable deposits. In the bank's balance sheet, this would be part of, and I put number 2, liabilities.
Yep,
Yep.
I'm the same.
Me
Yep.
too.
Right, good. Number 12, the required reverse ratio is equal to, and I put number 2, commercial bank's required reserves divided by its checkable deposit liabilities.
Yep, I'm the same.
Number 2?
Yeah, number 2.
Yeah, me too.
Same here.
Okay.
Great.
Okay, number 13, the figures in the table below are for a single commercial bank. All the figures are in thousands of dollars. Refer to the data given above. If the ratio is 10% and the check for $10,000 is drawn and cleared in favor of another bank, then the actual reserves of the bank above will, and I put still be 40,000.
I put number 3, decreased by 11,000.
Okay. Anybody else got anything different?
I put the same thing as you, number 1, but I'm not sure, I guess.
The reason,
I kind of went in between both of them, so I don't know.
well, the reason I went with number 1 was because I figured out what the ratio should be, and it was higher than it needed to be. You know, like it doesn't have to be the minimum required amount. And
So basically, the reason that I put number 1 is because it's saying the reserve ratio is 10%, and if they take out it, if there's a check drawn, then the actual reserve is not going to change.
Yeah,
Yeah,
that's
well-
true. That's true. That makes sense.
You put number 1 then?
Yeah, I put number 1.
So it's still going to be 40,000 then.
Yeah, because the actual reserves won't change.
Okay.
At least that's my theory. And if there was a homework question like that,
and what did you check on the answer on that one?
I'm still working on it here.
I don't know about you guys, but I was thinking, man, the homework questions that we have to do individually, like there's 50 of them, and they seem like a lot harder than the group quiz. You know? Wow. Anyway, so it's nice to like kind of talk them over with you guys. I really appreciate it. You know. Anyway, the reason that I was thinking that was, you know, would still be 40,000 is because if you figure what the reserve should be, given the, you know, what the checkable amounts that they have here, it's not, you know, like 40,000 is a lot more than they have to have, and so it wouldn't necessarily change just because they have a check come in. I just thought it was a weird.
Well, that's why.
Yeah.
The key to me there is actual reserves, which means the amount of reserves, and just because the check cleared isn't going to change the actual reserves.
Yeah. Yeah, it's just going to change. Yeah, because it's not going to change the requirement. You know, like it might change the required amount if it was less, but what you actually have there, you know, would be different. Yeah. I don't know. So
are we thinking on that one that it's number 1 then?
Well, I am, but I'm looking right now to see if there's. I remember doing it on the homework, but I'm trying to find it. It's in chapter 15, but.
Yeah, we did it in the homework because there were several different graphs, but after you've submitted it, can you still get into it?
Yeah, but I'm looking in the reading, not.
Oh, okay.
Let's try something else really quick, just to.
You had like 4 or 5 graphs that you went through and had to do all of the information on how everything was.
Yeah. I'm gonna have to get into that homework.
It looks like it's on. It's the very first one under money creation for chapter 15. Looks like is where it talks about it.
Under money creation.
Yeah. That's where it's got those graphs that we were pulling everything from for the homework assignments.
Plus 100 plus 80 minus 80. Winning potential.
And if I remember right, the reserves don't get touched at all in the first round, and then on the second round, then the reserves change. Because remember how there was like the row number 1 that you entered everything in, and then it was the row number 2. So when they very first cut the check, it doesn't change your reserves at all. But then on the next one, when the check's supposed to clear, then at that point it's supposed to change the reserves, if I remember right. But I could be remembering wrong.
So we're looking at chapter 15. Which one?
Money creation.
Money creating transactions of a commercial bank. I'm looking at the wrong thing.
Let me go back and look, and I'll tell you.
So why you said you think it's number 4, right?
No, number 3.
So why would it change? If let's say that it does change it, why would it change it 11,000 instead of 10?
Because it's by 10%, and so 10% of 10,000 is 1,000. So then you've got the 10,000 also. So I guessed 11, but I could be really wrong on this. I'm trying to see where I figured, like, what I used to figure out where it was coming from, and I'm not finding what I'm looking for. So.
Yeah, I can't either. This is crazy too because it doesn't give you the check my work option on this.
Yeah, it doesn't.
That's the first time that's happened to me. Okay, I'm going to check one more thing here. Just 1 sec. Give me 1 minute.
Oh, there it is.
Okay, so it's the one money creating transactions of a commercial bank. That looks like actually the right page, maybe.
I was just scanning through that and didn't see anything specifically.
That's where I was looking initially too.
Nothing there.
This holiday season, sell cheer with peanuts and Teleflor.
Maybe I was wrong. I'm on number 29 in the homework and I can't see the question that I thought it was. Maybe it was on the quiz.
Okay, here's this one right here. So if you go to, I haven't read all of what it says yet, but it's talking about if a check clears, what the balance sheet's going to look like. It's on the money creating transaction of a commercial bank page.
So 15.2.
And it's the, under granting a loan, it's the second little like blue table down. Right above that it says, in summary, assuming a check is drawn, by the borrower for the entire amount of the loan, $50,000, and is given to a firm. Well, I'll just keep reading for a second quietly because I might not be what we're looking for, but let's see. Just follows after the check is cleared.
Okay, here's the question on the homework that was making me think what it was. So it says, suppose that the Third National Bank has reserves of $20,000 and checkable deposits of $100,000. The reserve ratio is 20%. The bank sells $10,000 in securities to the Federal Reserve Bank in its district, receiving a $10,000 increase in reserves in revenue. What level of excess reserves does the bank now have? So $10,000. So I don't know. You might be right.
So, well, actually, if you look on this, now that I'm looking at it, I think that this is where my answer came from. So if you go to that page where it says money creating transactions of a commercial bank, where it says transaction 6, if you look at the first balance statement, it says the reserves are at 60,000, the loans 50,000, properties 240, checkable deposits is 100,000, stock shares is 250. Then if you go to the next one down, because they wrote a check out for $50,000, it says this is what it looks like after the check has been cleared against it. The reserves went from 60,000 down to 10,000, and the checkable deposits went from 100,000 down to 50,000. But then I would still probably be wrong because it would have decreased by 10,000, not by 11.
And if it was going to decrease, that's what I would think it would be as 10,000. But
if they had more in reserves already, looking at the question, than they actually needed, then.
But they don't, because their stock shares is at 400 and their reserves is at 40, and they are required to keep a 10%. So they have exactly 10% of reserves compared to their stock shares. And isn't it stock shares that it's based off of? No, it's checkable deposits that it's based off of.
Yeah, that's what I was saying. So I think I looked at checkable deposits.
well, it calls it demand deposits. So the demand deposits is 180.
Okay, so it's got way more in reserves than what the demand deposit is.
And that's why I was saying it would still be 40,000 because they didn't need to change it. And if you look at the other way, their actual reserves wouldn't change because a check drew on it. They'd have to change the amount, set aside.
I think we should move on and come back to it.
That's kind of what I was thinking.
Because I'm just feeling very confused at this moment in time.
Yeah, I really don't know what to think about it because I don't see any real clear answers on that question, and I even think that the graph is confusing because I don't remember anything that really talking about stock shares. The reserves is 40, obviously. Property shouldn't have anything to do with the reserves, nor should security and loans. I'm assuming demand deposits means checkable deposits.
Yeah.
Yep.
But we can come back to it.
And I thought they just threw all that other stuff in us to, make us think a little bit. But it wasn't part of the, figuring.
Yeah.
Anyway, so moving on to number 14. When money is created when, and then I put number 2, a bank grants a loan to a customer.
Yep, I put the same thing.
Me too.
Yep.
All right. Number 15, the federal funds rate is the rate that the banks pay for loans from. And I put number 3, other banks.
Yep, I put the same thing.
Mm-hmm.
right? And we ready to move to 16?
Yes.
Yep.
Okay. If Bank A has excess reserves of 1 million and all other banks in the system do not have any excess reserves, then the amount of additional loans that can be made by the banking system will be, and I put number 1 million also. What do you guys have?
I put a question mark next to number 1 and to number 4, and I couldn't decide which one was right. So I will totally go with number 1 if that's what you've got. I was trying to decide between number 1 and number 4.
What do you guys have?
I have 4, but I'm reading it again here. Okay.
I was going between both of them.
So it wasn't just me then.
It's just it's really tricky. It can go either way. I don't know. Most of this chapter is pretty straightforward, but there's a couple questions that get you if you're not careful.
Well, I was going with all the other banks in the system did not have any excess reserves, so that
Yeah.
means it's just Bank A. And
Yeah,
I
'cause
have,
the others can't loan anything.
yeah, so they can't loan anything, so that's the only thing is what Bank A has, which was 1 million. And that, you know,
I think number 1.
Number 1? Okay, I'm game for that.
At this point,
all right. Let's go on to number 17. When people withdraw money from their deposits in the banking system, and I put number 1, excess reserves of the banking system will decrease.
I put the same thing.
Yeah.
which one?
Number 1,
Okay.
does that sound okay to you?
Yep.
Yep, that's what I've got too.
Okay. Moving on to number 18. The fractional reserve system of banking started when goldsmiths began, I put number 4, issuing paper receipts in excess of the amount of gold held.
Yep.
I put the same thing.
Yeah.
Same here.
Okay, good. And then 19. If the required reserve ratio were 15%, the value of the money multiplier would be, and I put number 2, 6.67.
Yep, I've got the same thing.
Yep.
Good.
Yep.
Yep.
20. The balance sheet below is for the First Federal Bank. Assume the required reserve ratio is 20%. Refer to the above information. The money multiplier is, and then I put number 3, 5.00.
That's what I've got too.
Yeah.
Yep.
All right, so then we just need to decide on number 13, question number 13, what we want to go with there. Go back to that one.
I don't know why it doesn't let us have check my work. It always does.
Does it not have check my work on this quiz?
No, it doesn't show up on this one. This is like the first time ever.
That's not cool.
I know. It's like I kind of need it.
I know. That is my livelihood.
Okay, well, we can go back and look at this.
You know, looking at this, you read the definition to what a reserve ratio is. says the reserve ratio refers to the ratio of bank's reserves and bulk cashes to its checkable deposits. So if you think about it, if it's going to change, if it's going to go into a different bank, it's definitely going to change that reserve ratio to the other bank. And it should drop the other bank's reserve ratio down. So it might be right to decrease it. I just don't know if it's right to decrease it by 11,000, though. I don't know if that extra 10% is supposed to be included or if it's just the amount of the check.
Yeah. So I'm looking on those Quizlet things to try and see if I can find.
That's
either.
where I just went. Yeah, that's what I was getting it off of.
And I just found one that says, assuming a legal reserve ratio of 20%, how much in excess reserves would the bank have after a check was withdrawn for $10,000 and cleared against it? And it said it would decrease by $6,000. So I think decrease is the right answer, but by how much, I'm not sure.
Well, how much? So how much was the check?
It didn't.
10,000.
It was 10,000, and it was
how
a
much was the reserve
20%.
ratio?
20%.
So that gives you how much? Is that 5%? 5,000?
That was 6,000. Let me look up another one because there's another Quizlet that has one as well too to see how they compare with each other. I am just really torn on this thing. Yeah, so here's another one. Has a reserve ratio of 20%. And then it's asking how much reserves would the bank have after a check for 10,000 is withdrawn and cleared against it. And it says 6,000, but we don't know what it was starting at.
Well,
Without knowing what it was starting at, I don't. So I would say decrease is right, but that still leaves us 3 options.
if you look at it only as 180,
Yeah.
so the demand deposits, if you take 180 times 180,000 times 10%, and then it would be 10,000 because 180. Let's see, so it would be 18,000 to 17,000 would be what the reserves would have to change to accommodate that amount change. Does that make sense at all?
Yeah. So
if you have demand deposits and you start with 180,000, then the required 10% reserve of that would be 18,000.
okay.
Yep.
Then if you take 10,000 out, that drops your demand deposits down to 170. 10% of that is 17,000. So the deposits, the required deposits, will only change $1,000. So I hate to say it, but I almost still think it's this number one. I don't know what to do here.
I think it still is number one, and I think it's tricky because if you look at the reserves that they have, it's way more than they actually need. If you're saying, it's based on the demand deposits only,
Yeah.
then it still would not change.
Because they don't have to hold reserves on loans. I don't know if they have to do on securities or not. I don't know. There's 2 issues with this that make it so I don't know what I'm doing. So.
Well, securities aren't checkable deposits.
No, but the loans aren't either. So.
Yeah, loans aren't, and it's checkable deposits that the reserve is based on.
Well, if that's the case, then the change, even if you look at it and say the check clearing will change it, none of the options that are listed there with decrease fit the actual decrease that it would be.
I'm still kind of wondering though, because if you go back to that reading on, let's see, where was it at? Was it money creating transactions? Okay, so yeah, right there under money creating transactions, because the very first one shows where it's sitting at before that check is cleared. And then after the check is cleared, it shows, it reflects the new balance sheet and it drops it.
Uh-huh.
And so I'm still thinking, even though they have an excess, because they do have an excess of what they need, they've got 22,000 more than they need in reserves. But I would guess that it's still going to decrease it when it pulls out that check. It's just they don't have to add anything more to their reserves because they still have an excess.
Yeah, I mean, that their required reserves would change, but their actual, you know, what they actually have doesn't need to change.
Well,
Especially-
what they required wouldn't change, because what they're required to have is 10%, which would be the 18. But
Okay.
what they
Wait,
actually have would decrease, is my thinking in this. But I'm not solid on this, but this is my own thinking behind it. So, because the required shouldn't change at all, because they only have to have the 18, and then when they pull that 10,000 out, it's going to drop it down to 170, like he was saying. So then the required is only 17, but it's talking about actual reserves, not required reserves.
Yeah, and the actual, that's what the word actual was what my initial thoughts on number one were.
Yeah. So, and it's not going to change. So I'm still going with 1.
So here's a question I just found, and it's pretty similar. Maybe this can help us. It says, assume that the required reserve ratio is 20%. A business deposits a $50,000 check at Bank A. The check is drawn against Bank B. What happens to the excess reserves at a Bank A and Bank B? And here's the options. Increase by 10,000 at Bank A and decrease by 10,000 at Bank B. Decrease by 10,000 at Bank A and increase by 10,000 at Bank B. Decrease by 50,000 at Bank A and increase by 50,000 at Bank A. Increase by 50,000 at Bank A and decrease by 50,000 at Bank A. And the answer is increase by $10,000 at Bank A and decrease by 10,000 at Bank B.
And how much was the check for again?
50,000.
Yeah, but that's still talking about required reserves.
Yeah, and this is talking about actual reserves.
Oh, I guess it's true.
Because they may have had, as far as their requirement goes, it's just based off of whatever the percentage is, which in this case, in the one you just read, would be 20% of whatever their checkable deposits is.
I almost wonder if they're, I don't know. I know actual reserves is different than required reserves, but at the same time, I wonder if it's a trick question and they're referred to the same thing in this regards. You know what I mean?
I think that it does decrease. That's my thoughts behind it, based on what I'm seeing, is the actual would still decrease. It's just they're not going to have to add anything more to it because they're still way over what they need in reserves.
Yeah.
But since I'm not solid on this one, I don't want anyone else picking it unless they feel comfortable with it too. But I think that's what I'm going to go with. I think I am going to change it though from 11,000 to 10,000. So.
Okay.
I'm going to hop in and see if mine gives me the option to check my work. No, it doesn't let me either. Gosh, that's so important. That's frustrating.
Yeah, it is. It's the wrong day to have that crap happen.
I know, right?
I think that they're thinking, you guys don't need that anymore.
Just double checking. Number 16, we picked number 1 on that, right?
Let me see.
Yeah.
Okay, sweet.
I can find the question lots of times, but I can't find one that has the answer with it.
I know. I haven't been able to either. I've been doing a whole bunch of Google searches. Well, there's the Course Hero that says that it has the answer, but I don't want to pay them money.
Yeah, I know.
I'm slightly against that.
Yeah. There's just something wrong with paying money for test answers.
I know, right? I really wish they had that check your work button.
Why don't you guys go on to the next question since we have more questions?
We already answered all of them.
So I have one person that just won't get an answer, so we didn't find what happened.
Guess what we could do is have, I don't know, maybe someone submit it with the different answer and see what happens, I guess. I don't know.
We can do that.
I can submit what I got. You guys want?
Okay.
Yeah, I'm going. Submit.
I'm still going through and answering them. But I can when I get to it too.
Okay, so got 90% with what I had, so let me see what's wrong. Okay. Number 13 should be decreased by 10,000.
Good job.
Yes!
And
That's what I was going to go with.
okay, and number 16 should be a multiple. Yeah, it should be a multiple of 1 million.
Oh!
Yeah.
So not all what any of us had. It was number 3.
Yeah.
Well, that stinks because even though we know what the answer is, I still don't know why.
Yeah, I'd like to know why. Because that wasn't. I mean, I could deal with the 13 being wrong, but this one, I'd like to know why.
Yeah, because on 16, all of us guessed the other way. So
Yeah.
none of us had 3.
13's the one that I'm saying. I don't understand why, because it just doesn't.
A multiple of it. I mean, I'd say by the required reserve ratio, yeah.
Well, the multiple just means that it's going to be 1 million times a percentage.
Yeah, it's based off the multiplier.
Yeah.
Is it a percentage? Let's see, multiple. Well, we probably should get going because there's 2 chapters worth of mind map stuff tonight, unfortunately.
Yeah, I put them together as 2 separate mind maps. So I kind of went through and already worked what I thought they should be.
I think we should do 2 separate ones too, because the times that we've done the huge mind maps, they're a mess.
Yeah. So do we want to do 15 first because it's just super short and sweet, and then go back and do the other one that's longer, or do the long one first?
Let's just do the long one first.
Okay.
Get it out of the way.
Sounds perfect.
Okay, hang on just a sec.
Let me know when you're ready, and I'll kind of go through what I've got put together, and you guys can tell me what you think of it.
Okay. So we're going on 14.
Password is. All right, I'm in.
Thank you for doing that, because I was thinking taking turns. Oh.
Well, that's no biggie. Let me. I just want to bring up the words because that makes it easier to follow what you guys are saying as I scribe.
Well, I have it
Perfect.
but then I can't see. I can't see it on yours when you put it up there to follow along because it's too tiny when I'm looking on the screen.
I'll see what I can do about that. Okay, so chapter 15. Oh yeah, so we're gonna do 14 first, huh?
Yeah.
Yeah.
Okay, cool.
Okay, so on this one, are you ready to start? Sorry, I should ask that part first.
Just about. I'm just getting a screen share for you guys to see it.
Perfect.
Okay, I'll make it the entire screen. Can you see that, or?
Yeah.
Okay, I'm ready for you.
Okay, perfect. Okay, so the very first word that I took is actually halfway down, which is Federal Reserve System, which I put is what I drew everything off of.
Okay. And then what do you got? Okay, so Federal Reserve.
Yep. Okay, so then off of Federal Reserve, I have got medium of exchange, which is the first one, the first word at the top of the list.
Okay.
Then I also have unit of account and store of value. So all three of those come off of it.
Okay.
Then I've got liquidity off of store of value.
Okay.
Okay, then I've got M1 off of medium of exchange.
Okay.
And then I've got Federal Reserve notes off of M1. And I've also got checkable deposits off of M1.
Well, there we go.
And then off of Federal Reserve notes right there, I've got token money. Okay, then under financial, oh, looks like I haven't created that one yet. Okay, under, where does that one go under? Okay, so financial service industry, which is towards the very bottom, I have that one under Federal Reserve banks.
Under Federal Reserve banks?
Under, let me double check. Federal Reserve systems. Nope, Federal Reserve banks, which I haven't told you where that one goes yet. Okay, we'll come back to those ones in just a minute because we kind of go backwards on those. Okay, so if you go to near monies, I
Okay.
put that under M2. Did we put M2 on there yet?
Yeah.
Nope. Okay, so M2 goes under medium of exchange. Sorry. Some of these were really backwards, so.
And what did you have off of M2?
Near monies and also savings account and also money market deposit account. And then also time deposits.
Okay, I'm going to adjust this. Hang on.
And
Okay.
then also,
All I have is near monies. What else did you have off of M2?
Okay, so then also savings accounts,
Okay.
or savings account, pardon me.
Okay.
And then next one is money market deposit account, which is MMDA. And that the MMDA is in parentheses. And then time deposits.
Okay.
And then money market mutual fund, and in parentheses that one is MMMF.
Mutual funds. Okay.
Okay, and then I've got legal tender underneath store of value.
Whoops.
Okay, next one we've got is under Federal Reserve System. I've got Board of Governors.
Okay.
Okay, and then under Board of Governors, I've got Federal Open Market Committee, which is FOMC, that's in parentheses.
Okay.
Okay, and then underneath that one, I've got Federal Reserve banks.
Under the Open Market Committee?
Correct. Uh-huh.
Okay.
Okay, and then under Federal Reserve banks, I've got subprime mortgage loans.
Okay.
Okay, I also have under Federal Reserve banks mortgage-backed securities.
Okay.
Then under mortgage-backed securities, I've got securitization, I guess. How you say that, hopefully.
Spelling on that one.
SECUR.
It's towards the bottom.
Oh, there it is. Yeah, okay, I got it, I think. Okay.
Okay, and then the next one, Troubled Asset Relief Program, which is TARP, I've got under the securitization.
Okay.
And then under TARP, I've got moral hazard.
Okay.
Okay, now back to the Federal Reserve banks.
Okay.
Okay, off of that one, I have got financial services industry.
Okay.
And then we'll go back up to the top of the words again now and add in under that one right there, under financial service industry, commercial banks and thrift institutions.
Okay.
Okay, and then the last one I've got, which is Wall Street Reform and Consumer Protection Act, I put that one underneath moral hazards.
Reform and Consumer Protection Act. Okay. That all of them?
I believe so. I just counted and there's 28, and I believe I counted 28 as well on the mind map. So.
Okay.
Okay.
I was just wondering about the M1, M2 being, also including M1. So how is that accounted for on here? It's kind of tricky.
So I put both of them under medium of exchange, but M2 does include M1.
Yeah.
So,
and all the things that are under M1 would be included under M2. So it kind of seems like it should go in between.
should we
like
have M1? So what you're saying is put M1 in between M2?
Yeah,
and
between
have those two things.
exchange.
Okay, I'm totally game for that because technically M2 does include all of M1.
Uh-huh.
I'm thinking what you might need to do is take M2 and put it underneath.
M1.
Yeah.
Attach it to M1.
The only catch to that, though, is will it still reflect the two things that are there for M1? Because we've got them broken off into two separate words there.
That works fine to have it like that.
Yeah, I mean,
okay. Perfect. Okay.
Okay.
So
All
now
right.
it goes medium of exchange M1 and then over to M2.
Okay. I think that's good.
Okay, so now we got to come up with all the words that go in between it, and I didn't have time to do that, so let me get back here, and we can just I can read the definitions, and we can decide what words we want to use.
All right.
Okay, so reading assignments 10. Okay, first word is medium of exchange. That one says any item sellers generally accept and buyers generally use to pay for a good or service. Money. A convenient means of exchanging goods and services without exchanging in barter.
Okay, I put generally accepted for exchange.
Perfect. Okay, next one is unit of account, a standard unit in which prices can be stated and the value of goods and services can be compared. One of three functions of money. So maybe just a standard unit.
Yeah, I was just gonna put standard, but standard unit's good. Okay.
Okay.
Next one is store of value, an asset set aside for future use. So maybe just write the words future use.
I like that. Yeah.
Yeah, that's a good one.
Okay. Liquidity, the degree to which an asset can be converted quickly into cash. So maybe quick conversion.
Yeah.
Okay.
That works good, I think.
Okay. Next one, M1. So maybe, I don't know how we want to list M1. It doesn't give like a definition for it, but it's basically currency and plus checkable deposits.
I'm gonna put. I like it when we use formulas on here.
Yeah, I do too.
What's next?
Okay, next one is Federal Reserve note, and it says paper money issued by the Federal Reserve Bank. So
I
maybe
just
paper money.
attached
And then the next one, token money, is bills or coins for which the amount printed on the currency bears no relationship to the actual value of the paper or the metal it's embodied within.
So I just put for that one. I just put face value of money.
That sounds good.
That
Yeah.
sounds perfect. Okay, checkable deposit says any deposit in a commercial bank or thrift institution against which a check may be written. Maybe the checking account? I don't know.
Well, it's what's in it.
I just put deposits that a check may be written against it fit.
Okay, perfect. Okay, next one is commercial banks. That one says a firm that engages in the business of banking, accepting deposits, offering checking accounts, and making loans.
Oh man, let's see. I'm just going to put offers financial.
Sounds perfect. Okay, the next one is thrift institution, and it says a savings and loan association, mutual savings bank, or credit union. So maybe we could just put, I don't know, because credit unions technically doesn't include all of them. They're just the most common. But saving and loans used to be the most common, so I don't know. What do you guys think for that?
I'm like, what is another word for? What is it?
I put credit unions, thrift institutions, and savings and loan.
Perfect, because that's exactly what it is.
I don't know how you can make it shorter, and still include everything that should be there. So
The problem with those definitions, and I found this when I was doing the homework, is there's really 50 years ago there was a huge differentiation between a commercial bank and a thrift institution.
Yes,
Now
but now there's not.
it's not
yeah.
be the same. Okay.
Okay, so next one I've got is near monies. And it says near monies are certain high liquid financial assets that do not function directly or fully as a medium of exchange, but can be readily converted into currency or checkable deposits. So maybe readily convertible.
Yeah, that'd be good. Yeah, I'll do that. Readily convertible. Okay.
And the next
Okay,
one
right.
I've got is savings accounts, which interest payments are received, generally used for saving rather than daily transactions.
Okay.
Did you skip M2?
And then, Oh, no, I hadn't gotten to that quite yet.
All right.
We can do
We're
M2
cool.
though. Let me.
I'm
Okay,
just
so
following
M2.
along the list.
So M2, it basically says it includes savings deposits, money market accounts, money market mutual funds, small denominated. God, I can't read that. It's small. Small denominated time deposits, plus M1.
Yeah, so we might say M1 plus.
Okay, so I put M1 plus money market plus saving plus small time deposits.
Sounds good.
Perfect. Okay, so next one we've got is money market deposit account. And that one says interest-bearing account offered by commercial banks and thrift institutions that invest deposited funds into a variety of short-term securities. Basically, it's a savings account. It's just as liquid, except for you have to have a higher dollar amount, and you get paid higher interest because of it to open one.
So can we say that just a higher savings account with a higher minimum balance required?
Yeah, I put savings account with higher dollar amount and higher interest rate.
Perfect.
Okay.
Okay, time deposit, an interest earning deposit in a commercial bank. So this is basically like CDs and things like that. So it's basically locked up for a short period of time. And so it's not as liquid as a money market or a savings account, but it is still somewhat liquid because you can technically withdraw it early. You just get a penalty.
Yeah, you don't.
And it pays higher interest than a money market.
Yeah. So what's a good short way to say that?
Maybe short-term investment with higher interest rate. I don't know.
Yeah, I put the long one on there and it fit. I put not as liquid, penalty for early withdrawal, and higher interest rate than money market.
Perfect.
Okay.
Okay, so then the next one we've got is money market mutual funds. And these are mutual funds that invest in short-term securities. Depositors can write checks in minimum amount or more against their accounts. So, and this is a lot like the money markets, only it deals with mutual funds.
I'm just going to put money market invested in mutual fund.
Perfect. Okay, next one is legal tender. That one says any form of currency that by law must be accepted by creditors, lenders, for the settlement of a financial debt. A national official currency is legal tender within its own borders. So maybe just legal currency. I don't know.
I'm just going to put legal for exchange.
Perfect.
Okay.
Okay, next one is Federal Reserve System. That one says the U.S. Central Bank consisting of the Board of Governors, the Federal Reserve, and the 12 Federal Reserve banks, which control the lending activity of the nation's banks and thrifts, and thus the money supply, commonly referred to as the Fed.
I don't really have a line to put that on.
Oh, sweet. Oh, yeah, that's right, because that's our main one that we're pulling off of.
Yeah.
Sweet. No worries then. Okay, so the next one is the Board of Governors. The 7-member group that supervises and controls the money and banking system of the United States. The Board of Governors of the Federal Reserve System, the Federal Reserve Board. So basically it's 7 members, and New York Bank has to be one of those.
So 7 members, including New York Bank.
Yes, including. So 7 total, and one of those 7 has to always be New York.
Okay, got that. I just put it on just like that.
Okay. The next Actually, maybe it's not that one. It's the 12 Federal Reserve banks. That's what it is that New York has to be a part of. New York has to be one of the 12 banks.
And I was just thinking, what a sweet deal New York signed up for, you know.
Yeah, and so I think because New York has to do that, he's one of the board members by default. I'm trying to go back through here and read here where it's talked about that.
I think we could put. I don't know how. If we need to worry about that. It's.
Yeah, let's just pull it off because I know the
It
New
doesn't-
York person has to be one of them, but I'm not
Yeah.
seeing where.
And it's not on the descriptions of the words. So
Yeah, so let's just pull that piece off. So.
I don't think it's important to be on the connectors.
Okay, so I just 7-member board over the Fed, and that's all I've got there. So.
Okay. I think that's good.
So the next piece we've got is the Federal Reserve banks. There's 12 banks chartered by the U.S. government that collectively act as the central bank of the United States. They set monetary policy and regulate the private banking system under the direction of the Board of Governors and the Federal Open Market Committee.
Federal Reserve banks.
Yeah, so there's 12 of them.
Okay, I found it. Okay, so 12 bank.
Acting as central bank.
Yep, and they act collectively as the central bank.
Yeah. See if I can get that to fit. Got it.
Now, do you think we need to put down that they set the money policy and regulate the private banking system? Is that necessary in the connector?
No, I don't. I don't think that it needs to have the entire definition.
Okay.
Yeah, probably just briefly in there.
Okay.
Okay, so then the next one we've got is the Federal Open Market Committee. Now this is a 12-member group within the Federal Reserve System. So it's made up of the 7 members from the Board of Governors. Oh, this is where the New York president comes in. Okay, so it's the 7 members of the Board of Governors, the president of the New York Federal Reserve Bank, because he always has to be on this committee, and 4 of the remaining presidents of Federal Reserve banks on a 1-year rotating basis. So of the other 12, 4 of them are always on here, and they rotate yearly.
Well, we could say a 12-member group, including
7 members of the Board of Governors.
Yeah, which includes Federal Reserve.
Board of Governors.
Yeah.
President of New York Bank, and 4 other Federal Reserve Bank members. I don't know, that's so long.
Yeah.
This chapter is long, isn't it?
Oh, the whole chapter was painfully long.
I know, and then I got down to like, what? We have another chapter on here?
Yeah. Unfortunately, the other chapter was short.
Yeah.
All right. Well, this is kind of tough, but I got it on there, so.
Oh, thank you so much.
Not sure why it's freaking out on me, but it is.
Not liking it.
I just have to make it all zigzaggy like that to make it all fit, but we're good.
Thank you.
Yeah.
Okay, so the next word is... There's none on that page. Okay, next word, subprime mortgage loans. So this is high interest rate loans to home buyers with above average credit risk. So high interest, high risk loan, maybe.
There you go. Okay.
Okay, so then the next one is mortgage-backed securities. That is bonds that represent claims to all or part of the monthly mortgage payments from the pools of mortgage loans made by lenders to borrowers to help them purchase residential property. So maybe purchase of residential property.
Well, I think you should put bonds in there because it's,
Okay.
yeah, bonds,
Bonds to purchase residential property.
yeah.
Okay.
Okay, next one is securitization. The process of aggregating many individual financial debts, such as mortgages or student loans, into a pool and then issuing new securities, typically bonds, backed by the pool. The holders of the new securities are entitled to receive the debt payments made on the individual financial debts in the pool.
Okay, so basically they're just pooling
Pooling
large debts
Yeah.
and then selling bonds against them.
Yep. Next word is TARP, which is Trouble Asset Relief Program. In 2008, federal government program that authorized the U.S. Treasury to loan up to $700 billion to critical financial institutions and other U.S. firms that were in extreme financial trouble and therefore a high risk of failure.
Can't we just put troubled asset relief program? But I guess that's what that is.
Yeah. I would put maybe $700 billion.
I just put 2008 U.S. Treasury to loan to firms in trouble.
Okay, perfect.
Okay.
Next one is moral hazard, the possibility that individuals or institutions will change their behavior as the result of a contract or agreement. Examples: a bank whose deposits are insured against losses may make riskier loans and investments. So basically, they're taking a greater risk because they don't have, the liability is removed from them.
The possibility of taking a greater risk. So they possibly might not. They might change their behavior.
Okay, so I'm just putting. Oh crap.
I don't think that word will work there.
Okay, banks making risky loans and investments because of lowered risk.
Perfect. Okay.
I think the only one left is Wall Street Reform and Consumer Protection Act.
What about financial service industry?
I see that one now.
Okay, so financial service industry, that one says the broad category of firms that provide financial products and services to help households and businesses earn interest, receive dividends, obtain capital gain, insure against losses, and plan for retirement. Includes commercial banks, thrift institutions, insurance companies, mutual fund companies, pension funds, investment banks, and security firms. So basically, it's kind of all-encompassing of
all banks that aren't the main bank, the central bank.
Yeah, it's just all-encompassing of basically everything that are financial services that can be offered.
Yeah.
Hence the name financial service industry.
So the last one was just the Wall Street Reform.
Okay.
Okay, so on that one, Wall Street Reform and Consumer Protection Act says the law that gave authority to the Federal Reserve System, the Fed, to regulate all large financial institutions, created an oversight council to look for growing risk to the financial system, established a process for the federal government to sell off assets of large failing financial institutions, provided federal regulatory oversight of asset-backed securities, and created a Financial Consumer Protection Bureau within the Fed. So probably just created a check and balance system.
All right, I put law giving authority to Fed to regulate check and balance system.
Perfect. Okay, so do we have any that are missing? Because we should be good now.
Yeah,
I think we got all of those.
They're all there. Okay,
Sweet.
let me export really quickly.
Now we have the painful one done. That's a good feeling.
Yeah,
Because the other one will take us just a few minutes. It's short, sweet, and to the point.
okay, let me just make sure that that's safe.
You guys all have a good Thanksgiving?
Yeah, it was good. How about you?
Yeah, definitely.
What'd you do?
So I've been helping my mom write a cookbook for like a
Wow.
year and a half.
Uh-huh.
And so we did a photo shoot of all her Thanksgiving food.
That's neat.
Yeah, so we did a photo shoot, and then we had all the family over too for Thanksgiving. So
That's pretty cool.
yeah, I'm excited. We've already been talking with a couple publishers, and we've got a couple that say they want the book. So we're just supposed to submit it in
Wow.
February. So
That's awesome. Yeah.
yeah, it's kind of funny doing food photo shoots, though. Like when you think of a photo shoot, you don't think about trying to get the food to look all pretty.
Uh-huh.
Come on. Sorry, just give me a second. It's not letting me. It's giving me crap about another one again.
No problem. So what did you guys do for Thanksgiving?
What's that?
I said, what did you guys all do for Thanksgiving? I know you went to Oakland area, right?
Yeah, I was in Stockton.
Stockton,
So,
that's right.
yeah, it was good. It was really
Good.
good. Yeah, drove all day yesterday back, 12 hours. So
Whoa.
I have made that drive before. It's painful.
it's not terribly bad though. It's hard when it's with the toddler, that's for sure.
Yeah. I used
All
to.
right, I'm ready for you guys here. So there's only like 8 words here, it looks like.
Yep, it's super short. I kind of went through and figured out what I thought everything should go underneath. So
Okay.
I'll just walk you through that, and you guys can tell me if you like it or if we should switch things. So the first thing I've got is the fractional reserve banking system as our main one.
Let's see if I can open that up.
Okay.
Then I've got balance sheet off of that.
Okay.
Then I've got vault cash off of balance sheet.
Oops.
Then also off of balance sheet, I've got required reserves.
Okay.
Okay, off of required reserves, I've got reserve ratio.
Okay.
Okay.
Then off of required reserves, I've got actual reserves.
Okay.
Then off of actual reserves, I've got excess reserves.
Okay.
Then I've got federal funds rate off of required reserves. And then I've got monetary multiplier off of reserve ratio.
Okay. Sounds good.
Okay.
Okay, and so I didn't have time once again to do the words, so I'll just kind of go through and read each one of them and we can decide what we want. So I got a system in which, oh, sorry, I should tell you what word I'm on. Fractional reserve banking system. Oh, but that's our main word, so we don't need anything off it. Next word is balance sheet. Balance sheet just says a statement of the assets, liabilities, and net worth of a firm. So I would just put.
How many assets equals liabilities plus net worth?
Sounds perfect. Yeah, I like those formulas when we can get them put in.
Gives me nightmares
Okay.
about accounting, but
Okay, next one we've got is vault cash, and that one just says the currency a bank has on hand in its vault and cash drawers. So maybe just currency on hand.
okay.
Okay, next one is required reserves, the funds that each commercial bank and thrift institution must deposit with its local Federal Reserve Bank to meet the legal reserve requirements, a fixed percentage of each bank or thrift's checkable deposits. So maybe
Okay.
just percentage of checkable deposits.
Yeah, I can do that. Okay.
Okay.
Maybe required percent of checkable deposits. That might be better.
Oh, yeah.
Got it.
Okay.
Okay, next one is reserve ratio. So that one is the fraction of checkable deposits that each commercial bank or thrift institution must hold as reserves at its local Federal Reserve Bank or in its own bank vault, also called the reserve requirements. So probably just the fraction checkable deposits.
Yeah.
Reserve.
Okay.
Okay. Next one is excess reserves. So excess reserves, it's an equation, and it's actual reserves minus required reserves.
Okay.
Okay. Where's the next word? Maybe the next page.
Actual reserves.
Okay, federal fund rate. So federal fund rate is the interest rate that U.S. banks and other depository institutions charge one another for overnight loans made out of their excess reserves. So probably just overnight loans from bank to bank.
Okay. Then it's just monetary multiplier.
Perfect. That one says,
Actual reserve.
what was that?
And I don't have one on actual reserves.
Oh, okay, we can go back to that one in just a minute. Okay, so monetary multiplier is also an equation, and it's 1 divided by required reserve ratio equals monetary multiplier.
Okay, sweet. Got that. Last one is just actual reserves.
Okay, so actual reserves are the actual reserves. I don't know how to work that because it doesn't have. Let me go back and see what it says for that.
But actual amount held in reserves.
Yeah, perfect. So physical amount held in reserves, maybe. So we don't use the word actual.
Or numerical?
Okay. All right.
Yay, we did it.
That one actually almost looks pretty.
Yeah, the other one was a mess.
Yeah, I'm going like, oh man.
The other one had a zillion words.
You're going to get lost in that map.
Yeah. As I was trying to make everything work together, I did get lost a few times in it. I kept scribbling it out and changing what went underneath what to try and make it all fit and work. This one was a 2-second one. It was easy.
Okay, let me see here. Got that. Rotate. Yeah, I just need to email them to you, and we're done.
Sweet.
Okay, so I'm going to send this, and make sure that you can get them both because it looks like they might overlap each other.
Okay.
Actually, you know what? I just thought of something. I wonder, will it, when you go to submit it in iLearn, will it let you submit 2 attachments?
Yeah, I think so.
I'm going to try it real quick because I almost think that you can. I'm gonna try that really quickly.
Because I think we did on the very first one that we did, if I remember correctly. I believe we had 2 separate mind maps.
I can't remember that far back. Okay.
Yep, you can.
I got it. Yeah.
So you go ahead and pick file, and then you've got the option below it that says add another attachment.
Yeah,
And it's a little plus mark.
Cool. I just wanted to make sure. So.
I'm so glad you did.
Did you guys, did that come in for you guys okay?
Yeah, I see them downloaded.
I'm just pulling them up right now to see. My computer's taking its sweet time all of a sudden. I got number 1 perfectly fine. Number 2 still waiting for a second here. And there's number 2. Yep, I got them both. They look great.
Okay, sweet.
Okay.
Awesome. Thank you so much. Okay, so are we
Yeah,
still
thanks,
good
guys.
for Wednesday then?
Yeah, we'll have to
Yeah.
do one tonight.
Sounds good. We'll see you guys Wednesday then.
All
Okay.
right. Take care.
Okay.
Thanks, you too.
Bye. Thank you.
Bye.
Yeah,
Good
thank you.
night. Thanks, too.